right, testing. Hello, BiggerPockets community. This is Sterling White here. Hopefully everybody can hear me loud and clear. I am shooting this on my laptop as well as my phone as well. I had some technical difficulties, but just got to figure it out. So utilizing two different sources. And also for those of you who are on YouTube at this moment, the subject line is questions you must ask when interviewing a management company. The actual title of this live is, as you see, 4 real estate investing myths newbies believe. So everyone that is just now joining, whether you're on Facebook or YouTube or BiggerPockets Live, please just let me know that you can hear me and comment. Hello, Edward. Thanks for joining. Gotta make sure this lighting is good for everyone who's on Facebook, and then above for everyone who is on BiggerPockets as well as YouTube. So everyone who is just now joining, please comment below and let me know where you're from. Those of you who are just now coming across me, I am here in Indianapolis, Indiana. Got started in the industry 2009, 2010, around that time on the construction side. I'm also a BiggerPockets contributor, and at this moment I own and also manage my own holdings, which is just a little over 300 units, which is comprised of single family and also multifamily, primarily in Indianapolis and also Dayton, Ohio, and other Midwestern markets as well. So again, thanks everyone for joining. Hello there, Jeff. Thanks for hopping in here. Hello there, Anthony. Let me know that you guys can hear me so I can make sure that I am coming across clearly. And again, thanks for joining as well on this lovely Sunday. I know most people say it is the day of the Lord, but we still got to go out there and hustle and make some moves. So congrats on being out and educating yourself on this lovely Sunday. Hello, Andrea. Thanks for joining from Dallas, Fort Worth, which from what I've been hearing, that is a very hot market, among other markets, but that is definitely a desirable one at this moment. Thanks for joining, Matt Relira. Hopefully I pronounced that correctly. And hello there, Lyle First. Thanks again, everyone, for joining. Hello there, H. Lee Carter. Yes, give those thumbs up. I love seeing those, and give some hearts too, and also those wow faces. I think that's how you do it. Excuse the lighting. It may cut in and out. I have no clue why my laptop does that occasionally. So today what we're going to be discussing is the 4 real estate investing myths newbies believe as they're jumping into the industry or just getting started. And most of these are what I actually experienced when I jumped into the industry as well, which I started on the construction side, but when I flip more to the investing side, these are a lot that I encountered when I was looking to venture on the buy and hold, wholesaling, etc., when I was looking through the various models. So again, everyone who is just joining, thank you so much. Please comment and let me know where you are from. Thanks for joining, Nick Weaver out there in Southern California. Hello there, Mo Wolf in Chi-Town. Thanks for joining. We got Melody from Traverse City. Where is Traverse City? I'm going to actually have to Google that one. Google is just about cool for everything. You can find just about anything. Hello there, Victor. Thanks for joining from Las Vegas. Hello there, Charlotte Woods. Thanks for joining. We got Jim Lee from Fountain Valley. Thank you for joining as well. So I'm going ahead and jump right into the content. And those of you, please share the stream. It would be very much appreciated, because how Facebook's algorithms work is when you share, also give those likes and those loves, it pushes it out so more people can see the content and be able to see listen to the heat that I'm about to bring. Oh yeah. All right. So the first topic today, again, is 4 real estate investing myths newbies do believe as they're getting started in the industry. The first one is that wholesaling is where you should start. So wholesaling is good to get started, but it's not necessarily where you need to start. you can jump right into fixing, flipping houses if you have the capital, or you partner with someone, or you tie up land and do a development, whether that is retail space or that is apartment units that you build on top of that. So that's one thing. I did start myself on the wholesaling side, but as the chatter when I was reading on BiggerPockets, when I first started shifting to the investing side, was you got to start wholesaling, you got to start wholesaling. However, you can start in other realms and other models as well. So that's the first one. The second is you need to be wealthy or have a large amount of capital to get started, or have good credit. When I jumped on the investing side, I did not have none of those. Unfortunately, my credit, when you pulled it, it was nothing came up, and that's unfortunate. And I did not necessarily have a large sum of money, as well as what was that? I was not by any means wealthy at that present time. So with that being said, how I was able to acquire my first deal, that was through partnering with someone who had those three credentials. It could just be one or two of those credentials, but just not letting that be a barrier to jumping into doing your first deal. And then the third one, the common myth or misconception, is that it is easy. And that is whether you're wholesaling or buy and hold or fix and flip. And this is due to all of those shows that you may see on, HGTV, that show that, hey, we bought this property for, I don't even know the numbers. I haven't watched one of those shows in forever, but then they do a time lapse, and then it just skips and, it'll be a gut to studs type of renovation, and then they'll do a relapse that just goes into, hey, this is newly renovated, and most people may get that totally a different aspect from that, meaning that, hey, it may be this easy if those guys on TV can do it, but they do not see a lot of what goes on behind the scenes, which is managing contractors, finding the specific deal, tenant relations if you're on the buy and hold side and you get a tenant in place, and as mentioned, doing the underwriting and running the numbers on the deal as well. So there's tons of moving parts, and it's not as easy as many would say it is. I'm gonna give some shout outs right now. Thanks for joining David Sanford from Richmond, Virginia. Hello there. Melanie Nido from Michigan. Antonio Valueza, I butchered that, my apologies, from Houston, Texas. And for all of you, you mean we can't fix and flip? No, Terrence, that is a great point. You cannot fix and flip a house in 30 minutes. So that is a valid point. Thank you, Menace, for joining. The fourth point, so I'm just go ahead and just start from the beginning again. The fourth, starting from the beginning, the four misconceptions or myths newbies tend to encounter or believe when they're going to start it. One is you have to start wholesaling and when you jump into the industry. The second is you need a large amount of capital, be wealthy, or you have to have good credit. You don't have to have any of those. You can just partner with someone who does have those. The third one is that is easy, and that is from those shows that you see, HGTV, or was it Flip This House, which I actually did turn down one of those shows. That's an article that I did write on BiggerPockets. And then the fourth is get rich quick. This, from my personal experience, is that it's a get rich slow in this industry. And again, I'm just speaking from experience. Some others may have jumped into it and hit tons of home runs, but I feel that that is not necessarily sustainable. There will be some home runs that you experience, but along the way you will get some base hits as well. And if you are looking to get a home run on each and every deal, you will miss even those good deals that are in the workings if you're constantly working to get those home runs. So that's just speaking from experience, especially in today's market. If you're looking for those home runs, you're going to be looking through tons of properties and sitting on the sidelines most likely for a while. Hello there, Lee Wise. Thanks for joining the stream. So again, those are the 4 misconceptions, which most of those I experienced myself when I jumped into the industry. And what does Matt say here? If success comes overnight, expect it to be gone in the morning. That is indeed true. And that's what you see with those one-hit wonders. They'll have that one hit and then all of a sudden they'll fall off. Okay, so anyone who has any questions, do not hesitate to ask them. Again, I am here to bring value. I do like to just breeze through the content as always to make the best use of everyone's time. Again, I'll just go through them again. First one is wholesaling. Most newbies, which myself, I experienced this, was I felt I needed to wholesale in order to start in the industry, especially when I shifted from construction to on the investing side, which you can fix or flip. You can buy a property, rehab it, and buy and hold. You don't necessarily have to get it under contract for, let's say, $200,000 and then flip that contract to someone for $250,000 and get that $50,000 profit. That's a good way to get started because mostly you don't necessarily have to have as much capital up front, but you do in terms to find the deal on the marketing side. So, and then the third one is that it is easy on the investing side, which there is quite a bit that goes on in terms of when you do get a deal, that you have to market to find a deal, you have to vet plenty of properties, you have to underwrite those properties to ensure they hit your numbers, you have to manage contractors if you're doing the rehab, and also you have to do tenant relations, etc. And that's the tenant relations. If you're on the buy and hold, you get a tenant in place. And then the fourth is that investing in real estate is a get rich quick, which it is not. It's get rich quick or get rich slow. I forget who I heard that from. And it's all about it's good that you want to achieve the home runs, but there's going to be some base hits also that you would want to achieve. So I'll go through a couple questions. We got Alex right here. Anderson, thanks for joining the stream. The question is, when it comes to starting out, how do you approach people about becoming money partners? That is a great question, and one that I did have here too, is starting with what you would call your power base, and that can be your friends, families, colleagues, friends of friends, and you are essentially bringing them value. So let's say they're a doctor or someone who is a lawyer where that's their primary focus, and they have this excess capital in which maybe they've stuck it in some mutual funds earning 4%, and they know the benefits associated with the real estate side because you can get double-digit returns and also those tax benefits, that is the value that you're creating for that individual. So you just simply have a sit down and make the various connections. And when you have a sit down with that individual, better understand what they're looking to achieve. And then if you solve that problem in which they are looking to earn more money with their money, then that's when you say, hey, I have this deal, maybe it would be something of interest to you, and then that's how you kind of start the dialogue. There's various ways to go about that. So another question is, any go-to national lenders you use to finance homes after you rehab them? I do. I have not personally used leverage. I use all cash on the houses that I do purchase. I'm in Indianapolis, Indiana, Midwest, so the price points I deal in are $40,000 to $60,000. Sometimes I go a little bit lower, so it's all cash generally. And at a later point, may possibly refinance, but right now, just sticking on the all cash. On the multifamily side, I do utilize leverage. Andrea Alexander has a question here that says, is it better to find the buyer first in wholesaling? Whew, this is one of those questions that can go either way. And I would say to find the buyers first. Well, I mean, in today's market, if you find a great deal and then you market to buyers, then you'll be fine. But you always want to have that buyers list already built. That way, you know, Joe Smith or John Smith likes XYZ, and then you go find that deal, and then you shoot it right over to them, and then you're good to go. So having that buyers list, I would recommend, but in today's market, you could even go the other way and find a great deal and then go find the buyers, because everyone is definitely hungry for deals at this present time in this market. And it may be different in whatever sub-market you're into or market. In Indianapolis is definitely high, and I'm sure in other Midwestern too. Edward asks, and also, will a lender refi something in an LLC, or better to have it in your own name? I would say LLC. LLC is fine, and that also provides protection on yourself. Me personally, I would not own anything in my personal name. Always go LLC. What's the interest rate normal to? Trying to think. Maurice Cox, you've got a question that says, what's the interest rate normal to offer? If you could please elaborate on that, that would be greatly appreciated. What's a good way for a beginner to get comps to get ARV? Is there a rule of thumb if we should adhere to pull comps? Is fairly easy. Hopefully you have, again, for everyone, please like, I know I just act like a squirrel and just went on a random tangent, is please like and also give loves. It would be greatly appreciated, and also share so other people can see this. Again, due to Facebook's algorithms, that allows the content to be pushed out a little bit more, because I am doing my best to bring the heat to everyone and bring the most value. So let me see if there's some questions over here. Gosh, there's quite a bit of questions. So I will go here to Daniel about the ARV. Let's say it is getting a realtor, or if you have access to Zillow, which Zillow is pretty good too in terms of seeing what's recently sold. So you'll say that, let's say your property is in distressed condition, it's 100,000, and then you put 70,000 into it, and what you can see is the comps in that surrounding area say properties in that general condition that you have sold in the past 6 months for, let's say, 250. So in that case, you have put 100,000 into it. And no, you bought it for 100,000. You're all in. You put 70,000 into it, so you're all in is 170,000, and comps surrounding of a similar renovation to what you renovate that property to support that. Okay, you can have this. If things have sold for 250,000, then there you go. You have I think that's 80,000 built-in equity there. So that's a good way to pull comps if that's what you're. You said after repair value. So be able to leverage a realtor, and if you're looking to sell something, they'll be more than happy generally to pull those comps, because on their end, they're looking to list it and sell it so they can get those commissions. All right, so we got Ty Wallace. Thanks for joining. You're awesome. What do you consider high cash flow property, single family or duplex? If you could further elaborate on that, what do you consider high cash flow? It really depends on, you'll have to elaborate on that. Are you saying 12%, 14% cash on cash? That would be awesome if you could clarify. We got H. Lee Carter. That says, how many units would you recommend a newbie to start out with? 8, 12, 24, 36, etc. I myself skipped from purchasing single families, I was involved with well over 1,000 transactions, and then had just a little over, 200 single families, and then jumped from single families, didn't own any duplexes, 8plexes, and purchased a 46 unit, which is actually in this article that you see up there, and that was February of last year. But I would say that purchasing the single family and being involved with that really set me up to be able to do the 46 unit and build that confidence and remove that fear once I made that jump. So it's your personal preference. I would say the bigger the better due to economies of scale, because if you're dealing with, it's a high probability that you go out and purchase 20 single family homes that you're dealing with 200 different transactions, versus if you just buy, let's say, one 200 unit, that's just one buyer, and then you can have 3 or 4 people on site, versus if you have all these scattered 12 unit, 24 unit, 36 unit, then it's more labor intensive. But To answer your question, Lee Carter, again, start the bigger the better. 12 units if you feel comfortable with that, start with that. 36 if you feel comfortable with that, then that's completely fine. Just ensure that if you're going to self-manage, that you have that experience. If not, just outsource it to a reputable property management company. It'll it may cost a little bit more, but it'll save you time, which is something you can never get back. So here we go, simultaneously, thanks. No, thank you, Andrea, for the great question, Andrea Alexander. So John asks, do you recommend getting your team together before buying? First buy and hold, multifamily, or building a team as you go? That's, whoa, digging into the trenches. I would say have the team in place, or at least know the players that you are going to get on board. And that means that, hey, at this present time, we're at 200 units. We're going to acquire a 200 unit multifamily, which will bring us to 400 total units. That you need to have a game plan of, okay, well, we're going to need 4 staff members, whether that's a property manager, full-time maintenance tech, and let's say, property manager, assistant property manager, and then a maintenance tech, just to ensure that, hey, once we close on this, boom, we need to start the hiring process. So you just need to have a business plan in terms of the people that you will be have on board. Myself already, I built a property management company, my partner and I, so we had the infrastructure already. So that allowed us to be able to jump. Jim Lee, thanks for joining. No, Daniel, Antonio, no, thank you for joining. And glad I was able to bring you some value. Jim Lee, well, I'll skip to Steve O'Neill. Thanks for joining as well. That's what are some important by law within a LLC. I am not an attorney. If that has something to do with the legalities, I outsource that, so they deal with that on that side. I would just say LLC just helps you from a liability standpoint, among other things. If a roof collapses on a tenant, God forbid that does not happen, knock on wood, you heard that in the background, that they can go after the LLC and all the holdings, versus if you have it in your personal name, they can actually go after you and your assets. Jim Lee asks, what is your criterion steps for selecting a management team? I have not personally, I have always self-managed myself, but I would say is you want to find those 3 or 4 top property management companies, because what I look at it is using the 80-20 principle. There is, was it 80 out of 100%, there's, let's say 80, what is it, 20% of the property management companies that are actually the top tier, that 20%, and then the remaining 80% are just your average property management companies. So find that 20%, and then basically you can find them through Google search, or you can ask other investors that own holdings near the property that you're acquiring, hey, who do you use for property management, or do you have any referrals? And then you basically sit down with, let's say, those 3 or 4 candidates that you've narrowed it down. Maybe you had a total of 12 on your list, property management companies, so you've narrowed it down to 3 or 4. And then after that, it is highly recommended to meet each and every one of those owners of those property management companies, or maybe a property manager who you will be your direct contact. I know I'm getting into the trenches right now. And then basically just figure out which one is more in line with your investment goals and how they manage assets. What lead generator system do you have? Do you use cold calls, direct mail? And also, I would say primarily is direct mail as well as cold calls. So pulling on our side is we're looking for apartment complexes between 50 to 150 units, and we'll pull those in any given market. And then at that time, that's when we dig to find the owner information, and whether that is their home address, so we can send direct mail, or getting their contact information so we can email them or cold call them to get them on the phone to see if they're interested in selling. So there we go. Those of you, again, please give those likes and those loves if I am bringing value to you, because this is what I enjoy doing. I know it's Sunday and everyone wants to kind of chillax, but we still got to go out there and educate ourselves and always be constantly looking to be on the improvement side. So I've got a couple other questions, and I'm going to go ahead and hop off here. The second is, well, one question is, if you were to start over, what would you do differently? One is I would do everything virtually the same, which is I found, let's say when I transitioned from construction to buy and hold side, I didn't have, again, going back to number 2, I wasn't wealthy, didn't have the cash, I had no credit, and also, what was the other one? No money, no cash, wasn't wealthy, no credit. So with that, I partnered with someone who later became my mentor. And with that, I found them at a CrossFit gym. They were always talking about real estate investing. And I said, hey, I would love to gain all the knowledge that you've achieved in the industry. I will work for you for free. Just let me know what I need to do. And then fast forward a little bit, found a buy and hold excellent deal, because that person was looking to transition or increase their holdings. They had the multifamily, but they wanted some single family to further diversify. So they didn't have the time to find those deals. So that was the value that I brought. So I said that, well, I brought the deal to them, they funded it, and I actually asked for equity versus taking a wholesale fee. So that's one thing that you can do, is it's always about solving problems. That person didn't have the time, but they had the capital. I didn't have the capital, but I did have the time. So putting the pieces of the puzzle together. The third is, how do you determine which model to jump into? I believe this person was asking whether that is wholesaling, buy and hold, what's the other one? Buy and hold, fix and flip. Is whichever one is the most interest to you. Myself, I started on the wholesaling side, and that was one of the misconceptions. I always believed that you need to start wholesaling, which did end up working for me. But then at a later point, I did some fix and flips like that too, and then kind of transitioned to the buy and hold side and really like that even more. So that's where I'm at now, is buy and hold income producing multifamily holdings. And with that being said, pick a model that you believe that is interesting to you, educate yourself on it, and just jump into it. Partner with someone if you need to, so you can avoid all the pitfalls, because I hit so many potholes because I educated myself, but I'm a little stubborn, so I just jumped right into it. But I learned a lot through that. Got tons of education. The next one is, where did you find your first partner? Again, that was at a CrossFit gym that was here in Indianapolis, and they were looking to transition from a multifamily to single family holdings. And that was the value component that I brought, and I worked for that individual for free and learned so much through that process. So again, thank you everyone for joining the stream. If you happen to have any questions, for those of you who are viewing this at a later point, do not hesitate to comment and leave a question, but also at Sterling White, so I'll be able to jump in, and because I'm always again here to bring the most value to everyone. And if you have any suggestions on terms of content that you would love to hear, I'm more than open ears. And I'm just speaking from my experience in the industry. I'm not Mr. Know-it-all, just providing insights from my journey as I progress and evolve as an investor. So again, thanks for joining. I will see you all next Sunday on the next stream. Have a lovely Sunday.